Hello traders, good morning, good afternoon, good evening. How are you today? And happy Wednesday. How are you guys? You missed me Monday? Well, I feel honored. Thank you very much. Okay, I'm your drug. Okay. Well, I hope in a good way, Costas. I don't want to be blamed by the Greek police or government for poisoning you with drugs. All right, I'm good. Thank you very much, guys. I'm good. Had to leave yesterday. Had several meetings in the Toronto uh, downtown, so couldn't be around. Seems didn't miss too much, honestly. A few pairs invalidated the levels, never provided our setups. Few trades are building for us what we wanted to see, so we have several updates. So let's begin. Let's quickly going over the Canadian pairs because they are the main ones that have invalidated some of the ways. Start with the Euro Canadian. We wanted, we accepted short-term aggressive buys on the rally until we get sells. We wanted to see bearish hidden divergence, which we actually got right now. But this bearish hidden divergence went through all in one move, right? Through all the Fibonacci retraces. And this is exactly the place where we know that the market is not ready for us yet. Just yet. If we go to the 1 hour chart, we require two waves to the upside with a divergence by itself. And again, one straight move with no divergence. This is a bearish hidden divergence on the 1 hour chart as well. So 4 hour chart, bearish hidden. 1 hour chart, bearish hidden. But again, through all the Fibonacci retraces, which currently remove the idea of looking for sells. EuroCAD could be traded basically on both. I wouldn't deal with that. For me, it's kind of neutral, simply because of the weekly levels and divergence, daily levels and divergence. All the things hint that we might see some headache here. And that's why on that conditions, on that situation, it's best to leave it alone and keep it neutral. Of course, my point of view. Pound Canadian, same story. Had everything perfect, including a rare arrow pattern here on the daily view with divergence, with engulfing. Really looked amazing. However, never successfully created for us lower lows. That's not valid because of the two candles rules here. The trend line was never broken. So it was aggressive idea to look for a bearish hidden divergence, which again we got here, but look what happens. Same story, like with the EuroCAD. One straight move. When it happens with one straight move, this is a way from Mr. Market to say, that's not good. It's irrelevant, right? That's not what we wanted to see. Even the 1 hour chart, which we expected two waves and divergence, gone. Vanished. No divergence was created there. So pound CAD never gave us a sell opportunity, invalidated the last high, and basically here we can accept both directions to be tradable. Short term, of course, because according to the weekly cycle, we still have the room to 50, which is around 183, 184, maybe even a bit higher. And according to this duplication levels, right, we're here. So as long as we don't have new signs against us, false breaks and etc., we can let it go. And that's why for pound CAD, both directions are tradable short term, and of course go with the last momentum. So here we are in the last momentum of the 4-hour chart, bullish hidden, no divergence against us, not completed divergence against us. If 1-hour chart does provide 2 good waves down, you can start looking for possible continuation further. Okay, and that's all basically. So only short term, of course, aggressive due to the magnet zone we have from the higher time frames, and that means simply very low risks if you decide to get involved. Very simple. The next one is the Kiwi CAD, same story, broke this high, never provided us 2 waves here, it was straight move. This trend line never was broken when it was developing the 2 waves, never was broken, never divergence, invalidated the last high. However, Kiwi CAD is right on that trend line. It is dancing there for a while. The divergence is developing here, still potential. This is a regular divergence turning into fake convergence. Drop to the 4-hour chart. We will need to see here a good combo before we can start dealing with the sells. By ideal, this is the most critical zone for us to find the setup. It might take some time. Give it some time to create it for you. Don't force it to create it for you. Don't push that to create it for you. Give it a chance. Give it time. Okay? Cut franc. Bullish idea was and remains as long as we are above this low. Right? This is our idea. Aggressive, of course. We never got anything conservative. We never got higher highs. So we are aggressive. This is a bullish hidden divergence. Can we go and long it if we are bullish on daily? Yes. Let's go to the 1-hour chart. 1-hour chart must be 2 waves by itself with a bullish divergence. 2 waves here, not in play due to 2 candles rule, and no divergence between them. The only thing we have is 1 straight move on the 1-hour chart, providing the same bullish hidden divergence. We can dig lower in that case to the 15 minutes, but that makes it ultra aggressive, and 15 minutes does not provide nothing good by itself as well. There is no trend line. This is not a trend line. This is 1 straight move down. The angle is too sharp. This is untradeable. Well, from my point of view. But the only thing that could be done here is the step trading. 1, 2, 3, 4 breakout. Right? 1, 2, 3, boom. Breakout. But then we'll go here. 1, 2, 3. This is the breakout, right? Is that tradable? No, because here we never got 2 candles rule. Therefore, cut franc looks amazing. Looks amazing. But again, untouchable. Not safe, ultra aggressive, no clear setups. You are right, Kostas. This is also a correction that went through all Fibonacci's. 100% yes. It's holding the 61.8. That's the only difference between this and the others. You see, it's false breaking the 61.8. That's the only difference here between this and the other Canadians. But there is no clear setup. So with all the wish on earth to go and to trade it, there is no setup. That's why I'm showing it, I guess, because I've been asked a lot about these pairs recently, and it's very important. Well, you know how it goes, right? The emotions, the eyes and the emotions together shoot us the trading possibility. We see something and wow, that looks good, let's trade it. But then this is the very important step. Stop for a second and ask yourself the questions. Is that valid? Yes or no? Is that correct? According to the rules. Rules of the divergences, rules of the two candles, rules of the squeezing down in time frames, right? Ask yourself these questions. Do I have the divergence? Do I have divergence against me? Do I have the two candles rules? Is the retrace acceptable? Is the retrace in two waves? Do I have a clear setup? All these questions are very important to be asked. If the answer is no, don't force. Why? Why? If you force, your chances to end up profitable are lower. And that's not where we want to be. So that's about the Canadian pairs, which I wanted to cover first of all, because they are the main ones that actually changed a bit the view. We're looking to get action there. Never could get an action there, including the dollar CAD by itself. Still nothing. Well, yes, we can say now it's in kind of a triple top with a possible bearish divergence, but we never got anything doable, touchable, tradable here. So why to force? Let it create it, let it recreate it, let it build the setup for us before we take any action. Remember, according to the daily cycles, there is a great chance we spike through to 130, 131 before we take any further action. Now, yesterday's speech from Polos changed the levels a bit, and basically the way the traders accept it just say they are not ready for action on the Canadians. That's all. That's what it says. And if that's the condition, what's the best thing to do? Leave the Canadian pairs alone. Very simple. Very, very simple. Instead of forcing, right? Because the first thing we want to do is to force. It's like, how come I'm wrong? How come it's not moving? How come it's not making what I want? I will make it, right? I will make it happen. That's the first thing we tell us as traders. We're looking to be involved because we want to be right. Right? This wish to be right is stronger than the wish to end up in profits. Basically, the wish to be right. Okay, so that's about the CAD pairs, the first pairs I wanted to discuss about. Now, let's go over those that gave us the setups, and then we go through those that we have few updates and setups to follow. So we had OZ Kiwi. We have it bullish as long as this low holds. We expect that to rally, which means we can go and look for buys when we get setups. We need bullish hidden divergence on an ongoing trend on the 4-hour chart. Did we have a bullish hidden divergence on the 4-hour chart? Yes or no? Who can help me out here today, guys? Yes, beautiful. Thank you very much. We have the yes here. This is a bullish hidden divergence. Higher lows on the chart, lower lows on the indicator. Party. In that place, what do we require? We go to the 1-hour chart. The 1-hour chart must have two waves down and a trend line breakout. Trend line breakout was there. Bullish divergence was there. Is that a valid trend line? Yes or no? To answer this question, we must have bullish divergence, which we do, and two candles rule from the first low to the end of the correction. Did we have two candle rules in play? Yes or no? Looks like. Okay. Looks like it's it's the right answer. Looks like. In order to answer, let's put the lines, and then you will see it much clearer. Do we have the two candles here, guys? Yes or no? Boom! Here you go. The answer is no. You see? The correction here did not break it. It's almost the same high, I agree. But this is called forcing. That's what we call bend the rules a bit. Now in that case, those who long it would end up happy. I would say lucky and happy, because most of such cases would do this. And then what would you say? Damn, I did it again. I forced again, right? So the answer here, this is not a correct setup. That's called forcing. As simple as that. In that case, who longed here could make money. Or at least not to lose money. Is that correct setup to rely on? The answer is no. Again, just go through the steps. Each step, ask yourself the question: valid, not valid, valid, not valid. That's where you will get your answer. That's where you will get yourself the decision, correct or not correct. This is not correct. It doesn't matter how much you try to convince yourself. The answer is no. This is one straight move down. That's all. Okay? So this is a very, very important thing which I wanted to show you today, guys, because that's what happens live, and we need to know how we deal with that thing. Don't bend the rules. One time you will be lucky, 3 times you would regret. Does it worth it? No, it's not. Any questions about this one? Yes or no? My answer will not change. This is not correct setup. Don't try to convince not me, not yourself, not the market. My answer, and you know that, would be the same. If there is no setup to be valid, this is untradeable. Very, very simple. And again, I repeat, one time you would be lucky and make money, or at least not to lose. 2, 3 times you would lose because it's not correct. Does it worth it? No. And that's the same statistics that at the end of the period make the definition. Are you profitable or not? Very simple. Good. The next setup I have on the list from what we've been following is the Aussie versus the franc. Aussie versus the franc, we are bullish. Weekly bullish hidden bullish cycle, daily bullish divergence with a bullish false break here. And on the 4-hour chart, we've had bullish hidden divergence. Is that correct? Yes or no? Bullish hidden divergence. Tradable or not? I have yeses, I have no's. Why no? Why yes, I can understand, because it's a bullish hidden divergence. Why no? No clear bottom? You mean this one? No problem. Or the second one? First or second? They both are very clear. This is very clear bottom. This is not clear, I agree. This is not where the divergence from. This is where divergence from. Here. Very clear. So this is a bullish hidden divergence. Do we have daily divergence against us in that place? No. Are we still good to go with the trend? Weekly bullish, daily bullish, no divergence against us, 4-hour chart, bullish hidden divergence. Are we good to go with this bullish hidden divergence? Yes or no? Of course, yes. Thank you very much. What do we do in the next step? We draw down to the 1-hour chart, drop down, sorry. And on the 1-hour chart, we must have what? 2 waves. Beautiful. Do we have 2 waves here, yes or no? One, correction, 2. Zoom in. Zoomed. That's the last two candles in play, and it was broken. Are we here with a divergence? Same bullish hidden. We don't have any other divergence in play here. Only bullish hidden. Same idea. Sorry. No? Why is it not moving? Same bullish hidden divergence. Here, here, here. What do we do in that case? It's again, you see that yourself, guys. Now it's become what? Aggressive. No clear divergence on these two waves, right? It has to be there. Here. It's not. It's only bullish hidden here, here, or lower on the 1 hour chart. So again, that's not conservative setup. It is two waves, it is bullish hidden. We can drop lower to 15 minutes, yes, and call that a trend line because we have here the two candles. Do we want to do that? Look at this angle. Look at this angle. Is that tradable? Well, from my point of view, it's too aggressive. And yes, it worked. Okay, looking back, it worked. So what? So what? It could be easy condition for this, right? Do we want to trade something like that? No. This is exactly the reason why I show you that, guys. Because it's super duper seducing. But it's not tradable. It paid in this time. It could fail on many other times. These are not the best conditions. So yes, we are bullish. Yes, we are looking for the conditions. Yes, we got the conditions with the bullish hidden divergence. Do we have a setup, clear setup? Bullish hidden divergence followed by two waves down lower time frames. The answer is no. If we don't have it, we don't trade it. As simple as that. And that's what I want you to remember, guys. That's exactly the reason why I show it. Euro Aussie. We are sell there. This is a bearish hidden divergence on the place. Do we have here an opportunity to go for sell? We go to the 1 hour chart. On the 1 hour chart, look what we got again. Two waves up, bearish hidden divergence only, right? No divergence on two ending cycle, which again makes it tradable, but aggressive. In best case, skip. What do we do in that case? We drop lower to the lower time frame. Is that trend line tradable here? Again, no. The only thing to do here in that case to be safe is the step trading. 1, 2, 3, 4. And here it will be valid because of the two candle rules plays. 1, 2, 3, 4 breakout. That's the idea of the crystal ball, by the way. Right? The 1, 2, 3, 4. Is that the best setup you could get, guys? Yes or no? Exactly. The answer is no. So, is that tradable? Well, yes. Is that really smart to trade it? No. It's very easy, to look back and say, wow, it's paid, wow, it's paid. It's very easy. But in live, in real time, when you are looking at the chart, is that really the conditions you want to trade? No, it's not. And this is exactly why I'm showing you that, guys. It's too easy to force. Too easy to force. Much harder to wait. Okay? Next one on the list, pound kiwi. Pound kiwi, we are bullish as long as the low hold. We got ourselves, this is a question I got from Roberto a couple of days ago. We had here 2 waves down, bullish hidden divergence. The 2 waves were right here. Is that tradable? Is that correct? Yes or no? We are bullish here, right? Weekly, daily, 4-hour chart. All together. This is the last kind of divergence developing here. Kind of double bottom. Exactly. It's tradable. Is that classical? Correct. It's not. It's more aggressive. Because this is kind of a V pattern here. One straight move up, one straight move down. Again, tradable, tradable. Is that classical? No. It's aggressive. There is no problem to trade such setups. Just remember, if you do so, you do 2 things. 1, keep aggressive risk, which means lower, much lower risk. Much lower risk. 2, understand that the chances to end up in profits in such setups are less than in normal setups. Which means there is bigger chance that some of these setups will fail. There is bigger chance also they will pay the 1 to 2 because you are right from the edge. But the statistics here will not be like 60-70% to be right. It will be more like 40-50% time to be right. It's still perfect for 1 to 2 risk reward. It's bad for psychology. In the psychological aspect, it's much harder to be wrong more times than you're right, even though if you still make money with 1 to 2 risk reward. Okay, this is why I show you all these setups, guys. They are correct. They are aggressive. If you choose to deal with them, you have to know that. Euro yen, we accepted the long short term, as you remember, but I told you, remember what I told you guys? I would skip this last rally because I want to see this clearance. Once it's cleared, start looking for the sells. 2 waves up happened. Divergence happened. Now, let's ask ourselves the question for validation. Is this trend line correct, yes or no? In terms of 2 candles, is that correct, yes or no? Exactly, the answer is not. Because this is first candle, this is the second candle green, they give you the higher highs, didn't break. The only reason why this is correct, the only reason is what? That this is a range. In a range, this, right, on the 1 hour chart, this is the range. In a range, we always connect the last spot of the range. That's the only way, because the range is a corrective cycle by itself. Normally we connect this, right? So this is in most of the times 2 waves. That's why we connected. 2 waves is a corrective cycle. Range is a corrective cycle. This is the only reason why it is correct. Now it's breaking, which means now we can start looking for sell setups. Weekly bearish, daily bearish hidden, 4 hour chart, 2 waves up, false break, bearish divergence, 1 hour chart, broken. The only thing here is the stop loss, of course. Stop loss of 100 plus pips is too big. And this is the stop loss. For 1 hour chart, 100 plus pips is too big. So improve that by pullbacks. The pullbacks could be on the 1 hour, the pullbacks could be on 15 minutes. Let it happen. Get yourself 2 waves or bearish hidden divergence confirmation and look for yourselves. The risk will be much smaller. The reward might be much bigger. This is the invalidation level for these cells. Invalidation. As long as we are below it, it's smart to look for possible sells. If we break above it, it means our read is wrong and we will need to have another read. Okay, so this is basically what happens. This is why this is correct, because this is a range, not two candles, not in play, only because of the range. And the next one on the list is the Poundian, which does exactly the same. This is the first low, this is the second low, this is the range. Not because of two candles, because the fact that this is a range. Range that we traded, by the way, and we longed here, and we profited here. Game over. Now, for the pound yen, it must break the trend line. At the moment it does, it becomes bearish, sell rallies. It has to break it. Currently, it did not break it. Therefore, theoretically, both directions are still in play. No, I'm not going to keep longing here. I will be waiting for a sell setups here, because the weekly and the daily don't have any cycles to help us, and the only thing that we do have is a bearish hidden divergence on a daily chart. Therefore, for me, it's a saying from Mr. Market, the sells should be safer. Okay, so wait for this trend line to be broken. Once it does, we have here the okay to start looking for the sells. Kiwi dollar, we are bearish as long as we are below the daily tops. Daily starts to create bearish hidden divergence. 4-hour chart, that's the last two waves up, which again, if you ask me, is a bit forced. And the reason it is forced is because this is not a low. That's not a low. It's stuck inside these two candles. We can't call it a low. So yes, we can start connected from here through this top. The idea is the same. Start looking for the sells. Kiwi dollar start looking good, making even on the 1-hour chart a double top. So it looks okay for the sells. Our invalidation remains the higher one, of course, because this is the daily cycle, right? And this is our invalidation, which means every two waves up, every bearish hidden divergence formed, completed, our direction sells. So that's for the Kiwi dollar. Let me check my list for a second. Aussie Kiwi discussed, Kawaki discussed. Okay. Aussie dollar. Aussie dollar, very simple. Broke this trend line. We don't have anything clear on the higher time frames. Aussie dollar is for short term and for both. Very, very clear. Why? Because according to weekly, this triple, we can get 1, 2. According to the weekly from here to here, we can still go higher towards the 50%. So both cycles are completely in play. Completely in play. Therefore, both scenarios could happen. We don't have anything from the higher time frame, therefore the only possible time frame is shorter. And we will go only with the short term direction. So 4-hour chart divergences would design us the short term direction trading. Okay, pound dollar, same story exactly. According to weekly, we can see both the trend line broken to the upside, short term trading in play only, short term trading in play only. Both directions are in play. If we will get below this trend line, I still suspect the pound dollar to go lower to 136 or 132 before we fly higher. Of course, I might be wrong. This is my just personal view. I prefer to look for sells. Again, just for my view. But it's currently completely both directions tradable. So short term, both directions are in play. Let me check again. No, that's all. That's basically from what I have from my list. Anything from your list, guys, that you want to cover? Dollar franc, no problem. Dollar franc weekly has room to the downside. We discussed about it. We accepted that. Daily starts to develop the bearish hidden divergence, which means sells are safer. According to the same daily and its cycle, the 38.2 was reached. 50% might be reached, right? Before the sell take place. So we need to look for the sells. We got the two waves up here, 1 and bigger 2. We never got a divergence here. Therefore, this is not really relevant for us, right? On the same time, for our chart, this is a bullish hidden divergence. 1 hour chart, we don't have divergence here. We do have divergence here. Now what we need to do in the dollar franc is to validate this divergence. How do we validate this divergence? By two candles rule. Do we have two candles rule in play in this move down? No, because that's the last two candles, creating for us lower highs, lower lows. Therefore, dollar franc is untouchable, untradable at this stage. And this is exactly, by the way, why you see this kind of movement. Because the big money is not inside. If the setups are not clear, the big money is not inside the market. We always say that, we always repeat that. And you have to remember that, guys. If the setups are not clear, if you start to say to yourself, yes, no, maybe, you start to bend it a bit, that's exactly where it becomes wrong. Okay, the big money is not inside. Very, very simple. And here with this pair, it's much safer to go for sells due to the weekly and the daily. So we will want to see that the divergence completed. We currently don't have it here. So we will want to see that creating, forming, and look for sells. That's all. That's how we make a decision. OZ yen you want? OZ yen, no problem. OZ yen, weekly, bearish, daily, was short-term pullback, bearish hidden divergence, classical, 4-hour chart. We don't have two candles here, we have a range here. This is exactly like the pound yen and euro yen, 1-to-1. Same story. Same story exactly. Start looking for the sells. Exactly like pound yen and the euro yen, 1-to-1. Following by the book. Well, Swiss yen, the pair I didn't touch for a while. I don't love this pair because of the way it performs here. Really, I have no view here. My weekly view is very unclear. Daily, I don't see anything to be obvious. Sorry, untouchable for me, of course. Just my view. I think there are much better things. Okay, sorry, Sarah, and the Swiss yen. Okay, guys, let's continue then to commodities. Our oil remains bearish. Basically, we are bearish as long as we are holding this and this. So currently below, so all good in the wood. bearish it is. Would expect the previous low to be to come in play again, maybe even a bit lower than that. Unchanged, bearish as long as the trend line holds. Okay, natural gas, bullish in an investment. The entry is 2.6, stop loss on break even, unchanged. Silver and gold, stuck inside nothing. It refuses to create higher highs. On the same time, no lower lows. This is what we have here. This is the kind of situation that it created for us here. So this still holds, this kind of bearish channel. Oh, I would not be surprised if we get it lower. As you can see, there are no setups to trade gold and silver right now. I am looking only for buy. So I wanted to go deep in order to buy. I would prefer to skip the sells. I would prefer to let it go down, consciously ignoring the sells, and look for buy dips. So that's basically all. This is also currently holding its bearish tunnel. I would not be surprised at all to expect it. I would skip that again consciously, because as I said many times, I believe once the bottom is created, this one could fly. For me, I prefer to get the lows and look for buys. Would not risk my money for a sell side. I might be wrong. I might miss an opportunity here. Okay, that's why I show this opportunity and explain it. But I do want to see the cycles coming to the same place. I do want to see the levels. 61.8 currently is in play, still holding, still fighting. We might see each of these cubes, 1 or 2, and a fly from there. So my view still looks for the buys. Would be much safer for the longer term than try to deal with the sells. For those of you who trade the aggressive setups, basically can go and try the sells as long as we hold the lower highs, the lower lows inside the tunnel. The very short-term pressure still is bearish. Indices. The DAX broke the trend line and gave a beautiful push down. However, for those of you who are in, it's a great combination for not losing money and at least move stop loss to break even. I am still not sure if for the long term we would not get this clearance. It would be kind of ideal and classical situation. It doesn't change my view. Look for sells only. If we get another high, no problem. Like another correction, no problem. We'll be looking to sell this. So for me, it's bearish big time, as you know. This is the current bearish hidden divergence that came in play. The trend line broken. Those of you who are in, make sure you don't lose on such setup. Okay, Nasdaq still nothing in the play. Dow Jones, well, breaking live, yeah? Breaking the trend line. So it becomes bearish again. Oh, again unchanged. The lows are going high, the highs are going lower. My problem is that the lows are not going lower yet. So it's kind of stuck. Anyway, it doesn't change the view of mine. Sell rallies it was, sell rallies it is. This is the current trend line breakout. The very short-term invalidation is, of course, this for the sells. The long-term invalidation is, of course, this. Okay, so I would be looking to sell rallies here. The UK, FTSE as well, same story. This one is more following like the DAX. After the break of this trend line holding the bearish view, the break of the second trend line with the bearish hidden divergence also holding the view bearish. Invalidation is currently with the bearish hidden divergence is this. On the short term, of course. They all are still following the plan. Facebook is the only stock we are in to sell. This is our invalidation. We got the aggressive false break here with the bearish divergence. The trend line never broken yet. A break of the trend line would give the conservative view to go for sales. And the cryptos. Now the Bitcoin is creating the second leg down for us. So we would want to break it up. Let's draw the lines here. That's what we need to see. The divergence is developing. So once happens, we can start looking for the breakouts and buys. That's for the Bitcoin. Ethereum, same story. This is the current trend line developing. The divergence developing as well. Okay, so as I said many times, I prefer consciously look for the buys here because I think due to the momentums, it's much safer. Now it's creating the second leg down the 4-hour chart. It would be a great place to do that. By ideal, we should clear this level. So if it does clear that, daily divergence and the 4-hour chart divergence together could be killer for momentum, for bullish momentum. Okay, Ripple, same story, creating the second leg. Still nothing we can deal with that or do. Litecoin, same story. This is the development as we have it. And of course, take a look on the bigger view. The OMISGO, same story. This is still what we want to see. We want to break and hold above it. It still refuses to do so. And I can keep going and going. IOTA and all of them. Okay, we need the breakout to the upside. None of them did it. The only one did that was the Ethereum versus the Bitcoin. And basically, as long as this low holds, for me, every 2 waves down would be the breakout opportunity to go long, like this one, for example. Okay, I'm still inside from here, as you know, and my invalidation is this low. The risk here is tiny. The potential, if and when comes, is unlimited. That's why I love it so much. And the Ripple versus the Bit is always also on the list. We got a breakout. It looks simply beautiful for the long term. Yes, it takes time. Yes, it's not moving one way. Yes, it's slow right now. But remember, the potential, once it hits, and it hits big time. And that's basically the whole idea. That's all. Any other things on your list, guys, that you want me to cover that I missed or did not cover? If yes, please share right now. Basically, what I wanted to show today is that there were many aggressive setups. Are they good to trade? Yes, we saw them. Is it smart to trade them with regular risk? No. They are aggressive. They are forced. They are correct, but they are aggressive. Can we trade it? Yes. But if you do so, your risk must be lower. And remember, they are riskier, which means that their probabilities to end up in profits are smaller than the rest. Remember that. It's very, very, very important. For the conservative setups, we are still waiting. Euro dollar is one of the things we are waiting to trade. We are bearish here. And let me ask you these questions, guys. Did we get any good 2 waves retrace on the euro dollar? Yes or no? Is that a good trendline breakout? Do we have a divergence between these 2 highs? No, we don't. Do we have divergence between these 2 highs? Yes, we do. Is that valid in terms of 2 candles rule? No, it's not. Therefore, is that tradable? No, it's not. And this is exactly the reason why it's moving this way, because the big money is not in the market currently. That's what the market tells us. The big money is not here. That's how it looks when that's the conditions. You don't get clear picture. My point of view is, if there is no clear picture, there is no trade. Very simple. There is no rule of trading every day, few times per day. There is no obligation, no judgment, no commissions for non-trading. Remember, it's your own money. Treat with that responsible. Right? If you go to, for example, to, like, I don't know, like, let's say Black Friday, and you go to a mall looking for some sales, will that be 100% deal for you and you would come back with some new stuff? No. Only if you find something that you were looking for, only if you get the price you want, only if you get the conditions you want. Same in trading. Same in trading. The fact the pairs you want are moving, this fact is not enough to guarantee a valid setup. And this is what you have to remember. If there will be no setups today, there is always tomorrow when it comes to Mr. Market. Thank you very much for being here, guys. I wish you a wonderful day, evening, and I'll see you in the Telegram, of course, and tomorrow as well. Ciao for now. A wonderful evening to everyone. Thank you for being here.